Hi, everyone. I'm Taylor Combaluzier, a mining analyst at Red Cloud Securities. This session of our Pre-PDAC mining showcase will feature Canada Nickel Company. From the company, we have with us Mark Selby, Chairman, CEO, and Director. I'll note that if any attendees have questions, to just type it in through the CVent application, and we'll get to them at the end of the session. The presentation is also available on the conference website. So with that, I'll turn it right over to Mark to guide us through the story.
Thanks, Taylor. Canada Nickel, very simply, it's a brand new nickel sulfide discovery. It was discovered in late 2018. We acquired it after 4 drill holes in September 2019. In just over 18 months, we've turned it into one of the 10 largest sulfide resources globally. We're sitting just outside Timmins, just north of Timmins, about 30 kilometers adjacent to a highway. We have all the major infrastructure we need in place. We've already signed MOUs with the local First Nations groups and have very, very strong community support. Our goal here is to advance this project to be ready for what we believe to be a nickel super cycle, which will come the middle part of this decade. We've had super cycles in the late 60s, the late 80s, and the mid 2000s, and again with the EV overlay on top of strong demand from the stainless sector. Looks like we're ready for another nickel super cycle coming down the pipe. The project also for a lower carbon world is very well suited. The host rock for the deposit, which makes up 90% plus of what we're mining, is made up of minerals which when exposed to air spontaneously absorb CO2. So that in combination with the zero carbon hydroelectricity in the region and the willingness of Timmins to have downstream processing plants located near the mine site, we'll be able to produce, we believe, a zero carbon nickel cobalt product and a zero carbon iron product. To help get the project going faster and at a much lower capital cost, we've signed an MOU with Glencore to look at utilizing unused capacity at their Kidd Creek facility, which is halfway between our location and the mine site, and those things are progressing quite well. And again, with our team's experience, I advanced the Dumont Nickel project from a resource through to fully permitted construction ready in my past life, and we're going to aggressively advance this project and are aiming to have a PEA done this year and feasibility study done by year end, again to hit that mid-decade target. Again, the investment rationale and the reason why I have most of my non-real estate equity in this company is that when you get these nickel super cycles, you get and you have very, very few new nickel sulfide discoveries. They always trade out at a premium and trade out at an extra premium in a super cycle. And I'll close on some slides just to show what those kind of valuations can look like. I'll talk briefly on the nickel market. Again, I think people's views on the nickel market have shifted pretty dramatically, but just want to highlight a few key things, which really help make our project stand out versus the rest of the potential projects in the space. The nickel industry has a dirty nickel issue. More than 100% of the growth in supply has come from nickel pig iron in Indonesia, which is this bar on the right. This chart shows the relative amount of CO2 produced per ton of nickel. The reality with these NPI projects in Indonesia is that you're effectively melting a ton of soggy dirt, which takes a tremendous amount of energy. And so to create all the electricity for that, these plants burn 25 to 30 tons of coal, which in turn end up generating nearly 90 tons of CO2 per ton of nickel produced. That is not what Elon Musk had in mind in terms of introducing electric vehicles to decarbonize the planet. You can see on the left here just how inherently lower carbon most nickel sulfide projects are, and because of our rock's ability to soak up CO2, we're quite confident that we can deliver a zero carbon product. The other big thing I'd like to point out, is Indonesia is the concentration of supply. So Robert Friedland on many occasions has talked about nickel being the new gasoline. If you look at the oil analogy, OPEC at its peak was just over half of global nickel supply in the early 1970s. Today in the nickel market, just 3 countries, Indonesia, the Philippines, New Caledonia, and you can substitute Russia for New Caledonia in that chart. Those are 3 countries that have intervened in their mining sector, are short of cash. And so, I believe the temptation 3 or 4 years from now, if the Chinese have poured another 10 or 15 or $20 billion of investment in Indonesia, the temptation to put on special taxes or royalties to be able to generate several $billion in revenue for the countries will be too tempting to pass up. Investing in non-OPEC oil assets was a great trade in the early 1970s. And I believe investing in what I call ONEC nickel countries will be an equally great trade for the coming decade. The reality is GM, Volkswagen, who had big splashy EV ads during the Super Bowl, which I would never have guessed would have occurred, even if you'd asked me a year ago. They're not going to depend solely on Indonesia as nickel supply. They want local supply chains and local supply. So our project, which is in great proximity to North American car makers and also to Europe, is very, very well suited. In terms of the project itself, it's great when you find a great nickel deposit, a great deposit of any type. It's even better when you find it in a location where you have all the major infrastructure to build it, power, rail, road, and so forth. And that's what we have here, sitting just north of Timmins. The other big benefit is to find it in a place where you can actually permit and build a large mine. And those number of locations are shrinking dramatically around the world. Within 200 miles of Timmins, if you draw a radius around it, you have 4 of the 5 large gold and base metal projects that have been built in Canada over the last 15 years. You've got a Cisco to the southeast, the Dumont project, which I permitted in my past life, directly to the east. You've got Detour Gold to the northeast, and I Am Gold, Côté Gold project, which just started construction earlier this year. So in terms of allocation to actually build and permit a mine, it does not get much better than this. And again, the access to zero carbon hydroelectricity and being able to co-locate processing plants in the region is very, very beneficial. It sat undiscovered for 2 reasons. One, there's no outcrop, so there was no rocks for prospectors to bang 50, 70 years ago. Everything is geophysics in this area, and so other than a regional survey done by Inco in the mid-60s where they poked a few holes, which helped guide us in terms of which ones have the kind of nickel mineralization we're looking for. There was very little exploration done because, again, this much larger land package in yellow here, which is owned by Noble Mineral Exploration, was owned by a forestry company up until 10 years ago. And so you can see from around the area just how much exploration has been done there and how little was done on this property. And that's why you're able to find a world-class deposit sitting next to a highway in this day and age. In terms of resource combined between measured and indicated and inferred, we've got over 1 billion tons, at 0.25% nickel. The key thing and a key focus of our drilling during the last phase of the resource was defining this higher grade core. From the project in my past life, that was something that we did not have. And this, I think, is something that distinguishes us versus the other larger low-grade sulfide projects that are out there today. With the last round of drilling, we more than doubled the size to over 200 million tons, 0.34%. It's 1.8 kilometers long, 150 to 200 meters wide, and goes down to a depth of 650 meters. We have had recent drilling since the start of the year, where it looks like this high-grade core extends another 800 meters going to the northwest. We've discovered a large area of lower grade mineralization just to the west end of the structure. And again, we stepped out to the north, and have drilled off, what we believe will end up being probably another 100 million tons of 0.25% nickel going forward. So, again, just the Crawford structure on its own is going to turn into a very, very large resource. The thing with these types of deposits, the way the nickel gets formed is the nickel starts in minerals that you can't recover by traditional flotation methods. There's a process called serpentinization that happens to it over time, and some of those minerals migrate into minerals that you can recover by flotation. You will never get super high recoveries on these deposits. It is the nature of these deposits, but you can, using conventional flotation methods today, get 45, 50% recovery. And because of the nature of the minerals that have very, very high nickel content and no iron sulfides, we can produce the highest grade nickel concentrates in the world. So we're going to produce 2 concentrates rather than just the single concentrate we were targeting when I was at Dumont. The high grade will have 35% nickel content. and the standard grade will have a typical nickel grade in the range of 12 to 14%. Our last cycle test, got 52% recovery, with just under half of the nickel reporting to the higher grade con and just over half to the standard grade con. Again, too, for those of you who are cobalt bulls, these are among the highest grade cobalt concentrates in the world. So we believe will be very sought after in terms of feeds, for the EV industry, as well as being great feed for the stainless steel industry. The other key differentiator with these types of deposits is the process that creates the nickel minerals also creates magnetite. So we will be generating 15 to 30 tons of magnetite per ton of nickel, which will be a substantial byproduct. And as I mentioned, at the beginning, we believe we can convert that locally, into a finished iron product and do it in a way that will be, a zero carbon iron product, which we believe will be very, very valuable as the decade progresses. In terms of the local community, one of the things I was most proud of at our work at Dumont was that we were able to, permit Dumont with a very broad base of community support, and we intend to replicate that effort here. As I said, was very happy with, the press releases and our relationships with, the TTN, Matachewan and Matagami First Nations groups. I think you can see from the comments here from the local chiefs that they're happy with our team, our approach, and the project itself. And again, that'll be extremely beneficial as we continue to advance the project forward. The Glencore MOU was a big benefit for us. These are large-scale, low-grade projects, just like large-scale, low-grade copper projects in South America. You need to build them at a certain scale to make the overall economics work. And so, the ability to use the existing KID facility will allow us to get started at closer to 100 million US than $1 billion US for these projects, and effectively de-risk the project at about 2,500 to 3,000 tons a day, which will make it much easier and then hopefully much cheaper to raise the capital we need to build a much larger project. So we're working together with them. Again, Glencore is a busy company. If they did not think our project was a real project, they would not be choosing to spend time with us at this point in time. We are already the largest nickel sulfide discovery since the 1970s. This is a chart from Vale back in 2015, where they're highlighting just, that the discoveries of the last 20 years were half the scale of the prior 20 years. We think by the time we're done exploring Crawford, we'll have a very, very large resource. In addition to Crawford itself, we've optioned 5 other properties. Anything that's in pink here is potentially a nickel-bearing ultramafic. We flew the same geophysics package that we flew to zero in on the best part of Crawford, and we've identified a number of great targets, one of which we press released last week was McDermott. Again, the same coincident anomaly that yielded the best high-grade core at Crawford has appeared up and is 15% bigger here than it is at the main zone. Interestingly, there was some drilling done back in the early 1970s. It was not assayed, but the logs highlight significant amounts of magnetite all through the core and sulfides up to 10%, which is about the highest quantity of visible sulfides that you see in our core. So, we will be drilling this sometime, hopefully by the end of this month, early April, once the permits are in, and we're very, very excited about the potential of this deposit, which happens to be just 10 kilometers to the west of the Kidd Creek mine site. We've done very, very well since our 25-cent financing just over a year ago. You can see, some of the other higher grade stories, have traded at even higher values. We have a multiple of the resource that those deposits have. Why I'm keen to get a PEA done quickly and then get the feasibility study done is to make it very clear to investors just how much value and how much nickel we'll be able to produce relative to some of these other projects. At the end of the day, you get 1 or 2 good sulfide discoveries per decade. In the 1990s, it was Kabanga and Voisey's Bay, which Diamond Field sold to Inco and Falconbridge. In the early 90s, late 2000s, it was Jubilee and Lion Ore. And again, these are the kind of valuations you can see in a nickel super cycle. But for us here, in terms of our near-term goals, this was one of the 2 discoveries. Sakatti at Anglo American was one, and Sirius's discovery of Nova Bollinger in 2012 was the other. At a feasibility study stage, it was acquired for $1.8 billion. Just to give you an idea of how much nickel Tesla is going to need, based on their 3 terawatt target or 20 million EV car target, that will be 1/4's worth of Tesla's 1 to 1.5 million ton nickel consumption by 2030, the entire resource. The market is going to need these large low grade stories, and we're very well suited to deliver. We raised money last fall, so we're in great shape to year end. And again, we believe we've got one of the great nickel sulfide discoveries ever. We think it's exceptionally well timed, and we're in a great location to be able to build and permit a mine, and we think we're going to create a substantial amount of shareholder value from this point forward to the middle part of the decade. With that, I'd be glad to answer any questions.
Great, thanks, Mark. So we've had a couple come in, and I'll start off with, is there a specific nickel grade or product for EV batteries? And maybe you could just kind of expand on how the Crawford concentrate will fit into that, particularly with, I know sulfur is an important piece of that equation.
Yeah, so there's been a lot of discussion around class 1 or class 2 nickel and whether that's suitable or not suitable. At the end of the day, the Chinese are going to build processing capacity to take material that comes from either a laterite or sulfide source and convert it into whatever product the market needs. So, I'd love to say that sulfides are special, but they really aren't. That conversion capacity is going to be built over the next 18 months in China because battery sulfate premiums are very high and NPI discounts are very low, and those are going to converge as the Chinese build all this processing capacity. So, the key though is, if you have the highest nickel content possible with the least amount of other impurities, that is obviously going to be more attractive. And so that's, a high grade concentrate is really targeted towards the EV sector, and our standard grade is more targeted to use as a ferronickel, be converted into a ferronickel to be used for the stainless steel sector. But at the end of the day, both products can go to stainless steel or both products can go to the EV market. It's just whoever's going to pay the highest price, and having that flexibility is ultimately beneficial in terms of getting the highest price.
Right. Okay. And another question that came in, just wondering how much of the nickel is in sulfides versus how much is locked up in olivine?
Yeah, so that's a very, very good question with these types of deposits. So, I think the first release after we went public, or the second release, was some initial mineralogy results, which we've continued to do throughout the ore body. So in that higher grade core where there's a little more sulfur floating around, what we're seeing is roughly 80 to 90% of the nickel is in a potentially recoverable mineral, which is hazelwoodite, pentlandite, or warite. In the lower grade, lower sulfur zones, what we're seeing is roughly anywhere from 50 to 60% of the nickel is in recoverable mineral, and generally we get 60 to 70% of that recovered into a concentrate. And again, that's also based on my past experience with Dumont, which is a very, very similar type of deposit.
Right. Okay. So with that, I guess the stocks had a great run up, and as you outlined on the valuation slide you put up, there's a lot of room to go. And I think there's a lot of room to go as well with that. Maybe you could just outline the opportunity for investors and how you aim to create shareholder value.
Yeah, so from here forward, we've got sort of two very distinct streams in terms of how we'll unlock value here going forward. So first off, is de-risking this main project. Again, I could have waited until we kept drilling and drilling and drilling and got even bigger, but we really wanted to demonstrate what the economics of these projects can look like, because I don't think there aren't that many of them, and so investors I don't think really understand just how valuable these projects are. So as we advance with the PEA and then the feasibility study by year end, that whole stream of work will help de-risk the project and add value and demonstrate that it'll be a world-class asset. And then the second piece is stepping out with the exploration around the region. So on that slide that I had up, let's go back here. What you see, oops, sorry, one more, is on this scale, that little brown peanut there is what 900 million tons of resource looks like, at that scale. You can see, based on some of the size of the structures that we're seeing there, that we're pretty confident that we're going to find another 2 or 3 of these peanuts, among the property. If you go to Western Australia, you see the three largest low-grade nickel deposits are all within 25 miles of each other. If you go to northern Manitoba, there's a bunch of smaller deposits, but again, they cluster like this. So, we're quite confident based on the geophysics that we've flown, that this won't be a single deposit, but will end up being a multi-deposit thing. And, again, The majors didn't like nickel for a long time. I mean, that's why the Dumont project from a past life, was a lot of work, to continue to finance and advance that last decade. This decade, things have flipped 180 degrees. BHP Billiton spent most of the 2010s trying to sell their nickel business and unsuccessfully doing it. Today, BHP has three core focus metals that they talk about every time: copper, potash, and nickel. And if BHP is thinking that way, that Rio Tinto and Anglo American and Glencore, who we're already working with, are probably thinking in a similar kind of vein. And the reality is there's just very few assets in the nickel business that are of the scale that can really move the needle for the majors. So, once, it'll still take another sort of 6 months before they figure out, exactly how they want to get into the nickel business. But once they do projects like ours, in the right location with great community support, a low carbon footprint, and a scale to them that matters, will really tick a lot of boxes for them. So, again, the kind of values that I showed on the prior slide in terms of some of those historical takeout, premiums, I think are, if nickel continues to move the way, way we do, I think it'll be, a pretty exciting several years here for our shareholders.
Perfect. With that, I think we have to leave it there and let people get to the next session. So thank you very much, Mark.
All right. Thanks, Taylor. Thanks, everyone, for listening.